Welcome to ZICA Academy YouTube channel. If you are coming across my lecture for the first time, please like the video, share it with others and subscribe so that you don't miss my upcoming videos. If you are a returning subscriber, I say thank you for being part of this channel. In this lecture, I want to examine double taxation arrangement. Double taxation arrangement. Where an income which had been taxed in the Commonwealth country will also need to be taxed in Nigeria. A relief will be available to avoid that same income being taxed twice. A relief that will be made available where an income which has been taxed in a Commonwealth country will also need to be taxed in Nigeria. That relief is said to be the double taxation relief. Double taxation arrangement is a formal bilateral agreement made by two countries to resolve issues involving double taxation of the taxpayers. Formal bilateral agreement made by two countries to resolve issues involving double taxation of taxpayers' income. Definition of terms. Number one term, which I will examine, is Nigerian company. A Nigerian company is a company that is established under the Nigerian law. A company established under the Nigerian law is said to be the Nigerian company. So, a company that is incorporated under the Nigerian law, such as CAN Company and Allied Matter Act, a company registered under Corporate Affairs Commission in Nigeria, such company are said to be Nigerian company. Number two is resident individual. Resident individual. An individual is said to be resident in Nigeria if such individual is domiciled in Nigeria. If they are domiciled in Nigeria. An individual who domiciled in Nigeria is said to be a resident individual. Then, if such individual sojourns in Nigeria for 183 days or more, if such an individual sojourns in Nigeria for 183 days or more. So, any individual who sojourns in Nigeria for 183 days or more, such person is said to be a resident individual. If such an individual serves as a diplomat or a diplomatic agent in Nigeria, if such individual serves as a diplomat or a diplomatic agent in Nigeria. An individual who serves as a diplomat or a diplomatic agent in Nigeria is said to be a resident individual. Double taxation relief available to Nigerian company or resident individual. Double taxation relief. Double taxation relief shall be the lower of 1. Commonwealth rate. 2. Half Nigeria rate of tax. The lower of these two will be the double taxation relief available to a Nigerian company or resident individual. So what this means is that, one, where Commonwealth rate is less than half Nigeria rate of tax, relief shall be, this is lower than this. Nigeria tax rate is currently 30% for company income tax. For company, 30%. Half of 30% will be 15%. If Commonwealth rate, let's assume that is 13%, relief shall be the Commonwealth rate. Relief shall be Commonwealth rate, because the 13% is less than 15%. 2, where Commonwealth rate is greater than half Nigeria rate of tax. This one is greater. That means this one is lower now. So in this case, relief available now, relief shall be half Nigeria rate of tax. This rule is applicable to Nigerian company or resident individual. Now, non-Nigerian company or non-resident individual, an individual who doesn't domicile in Nigeria, who sojourn in Nigeria for a period less than 183 days, or an individual who doesn't serve as a diplomatic agent, or who doesn't serve as a diplomat or a diplomatic agent in Nigeria, such individual is said to be non-resident individual. So, non-Nigerian company, any company that is incorporated under any other law, a company incorporated under any other law other than Nigerian law, such company are said to be non-resident and non-Nigerian company. A company incorporated under foreign law, not under CAMA, not registered by CAC. A company incorporated under any other law other than the Nigerian law, such companies are said to be non-Nigerian company. So double taxation relief available to non-Nigerian company or non-resident individual. I will explain what this means. So the relief available now, double taxation relief available. Number 1, where Commonwealth rate is less than Nigeria rate of tax. Where Commonwealth rate is less than Nigeria rate of tax, relief available for non-Nigerian company or non-resident individual relief shall be half of Commonwealth rate. Half of Commonwealth rate. Number 2, where Commonwealth rate of tax is greater than Nigeria rate of tax. Where Commonwealth rate is greater than Nigeria rate of tax. So relief available, relief shall be Nigeria rate of tax minus half the Commonwealth rate of tax. So this is the double taxation relief available. Steps for solving double taxation relief question. Step number 1, determine whether the individual involved is a resident individual. And if it is a company, determine whether it is a Nigerian company. I've explained what a resident individual means and what Nigerian company means. This will enable you to determine the relief available in that case. Step number 2, compute the adjusted profit for individual company and for the total. Compute the adjusted profit for the individual company and for the combined operations. Then you claim, let me say, compute the total profit. Compute the total profits for the individual company and for the combined operations. By total profit, we mean the taxable profit. So step number 3, determine the Commonwealth rate and the Nigerian rate of tax. Determine the Commonwealth tax rate and the Nigerian tax rate. So to calculate the Commonwealth rate of tax, we have the tax paid or payable in Commonwealth country. Commonwealth country over total profit of the Commonwealth country. Times 100 over 1. Tax paid or tax payable in Commonwealth country over total profit of the Commonwealth country. The total profit will have been arrived at in step 2. So the total profit you arrive at, that of the Commonwealth country, that is what you are going to have in the denominator. The tax paid or payable in the Commonwealth country, you have that in the numerator. Multiply by 100, that will give you the Commonwealth rate. The Nigerian company income tax rate currently is 30%, and it may be subject to change at any time. And for an individual, you use the graduated tax table, or information to calculate that may be provided in the question. Step number 4, determine the tax payable in Nigeria, which will be Nigeria tax rate, Nigeria rate of tax times total profit. Total profit of the combined operations. If I say combined business operations, I mean the combined business for both Nigeria and non-Nigeria. The combined operation, the combined result. So you multiply that by Nigeria rate of tax. If it is 30%, 30% times total profit. You arrive at total profit when you compute the adjusted profit. Then you claim relief for loss, if any. Then you deduct capital allowance. That will give you the total profit. So, step 5. Deduct the double taxation relief available. Deduct the double taxation relief available from the results obtained from step 4 above. That is the tax payable in Nigeria. So you now deduct the double taxation relief available, you deduct it from it, then you will get the tax payable in Nigeria. So that will give you the actual tax payable in Nigeria. Now, I want to know that the relief, double taxation relief, you are going to deduct now. Double taxation relief, which we will deduct here. That will be double taxation relief rate, double taxation relief rate. To determine the double taxation relief rate, you decide whether it is Nigerian company or non-Nigerian company. I've told you that for a Nigerian company, the double taxation relief rate shall be the lower of Commonwealth rate and half Nigeria rate of tax. And for non-Nigerian company, we said if the Commonwealth rate is less than Nigeria rate, we said the relief shall be half of Commonwealth rate. But if the Commonwealth rate is greater than half Nigeria rate, is greater than Nigeria rate, the relief shall be Nigeria rate minus half of the Commonwealth rate. So that will be the relief available here. So the double taxation relief rate times, you multiply this by the total profit of Commonwealth country. You multiply by total profit of the Commonwealth country. Not the total, not the combined operation. That of the Commonwealth. Let's assume the Commonwealth country. If it is Ghana, then that means you apply the double taxation relief rate on the total profit obtained, that is the taxable profit of Ghana. By total profit is the same as taxable profit. To compute the total profit, computation of total profit. Total profit shall be your adjusted profit. You would have computed your adjusted profit by starting with the net profit as per account. You add no allowable expenses. You add not taxable income not reported in accounts. You deduct allowable expenses not reported previously in the account. You also deduct the not taxable income reported in account. Then you arrive at the adjusted profit. After your adjusted profit, you have the loss relief, if any. You deduct that. Your adjusted profit will be your accessible profit if there is no loss. Your accessible profit, you add balancing charge. You deduct capital allowances, which comprises initial allowance and annual allowances. So after all these adjustments, you arrive at the total profit. And if possible, your capital allowance will be given in the question for the Commonwealth country and for Nigerian operations as well. So that will be provided in the question. Example, Olab J Nigeria Limited. The word Nigeria Limited shows that this is a Nigeria company. Is a manufacturer of pesticides and is based in Mowe, Ogun State. The company has been operating in Nigeria since 2001. One of the major highlights of the Summit of Heads of Government of the regional body, Economic Community of West African States, ECOWAS, held in Abuja, Nigeria in 2014, was the encouragement of trade among member states. with the expected introduction of a single currency, ECO, for the sub-region in 2020. It is hoped that the problem of currency exchange risk will be reduced considerably. It was as a result of the future prospects in the West African market and general acceptability of the company's product through numerous sales representatives from Ghana that made the management of Olabje Nigeria Limited to extend its operations to a Commonwealth country, Ghana, on January 1st, 2015. The business is located in Takoradi, Ghana. The results of the business operations in Nigeria and Ghana for the year ended December 31st, 2018 are as follows. We have Nigeria, we have Ghana, and total revenue 32,050,000 for Nigeria, 19,040,000 for Ghana, and 52,690,000 for total. Other income 1,010,000, 850,000, 2,660,000 for Nigeria, Ghana, total respectively. We have the total to be 34,660,000, 20,690,000, 55,350,000. Less cost of sales 12,330,000, 6,220,000, 18,550,000. Gross profit 22,330,000, 14,470,000, 36.8 million. Less other expenses. We have salaries 4,950,000, 2,050,000, 7 million. Bad debts 1.6 million, 500,000, and 2.1 million respectively. Entertainment 850,000, 120,000, and 970,000. Legal expenses 1,270,000 and dash for Ghana and 1,270,000 for total. Traveling expenses 1,250,000, 730,000, and 1,980,000. Repairs and renewals 1,540,000, 900,000, and 2,440,000. Bank charges 425,000, 110,000, and 535,000. Audit fees 1,400,000 and 1.4 million. Depreciation of assets 1,020,000, 720,000, and 2,540,000. Foreign exchange loss provision nil 1,410,000 and 1,410,000. Miscellaneous expenses 900,000, 200,000, and 1.1 million. Foreign taxes paid dash 1,030,000, 1,030,000. Net profits 6,725,000, 5.5 million, 12,225,000. Then additional information. 1. For the Nigerian operations, bad debts include 900,000 general provision. Note 2. Legal expenses consist of tax dispute 400,000 naira. Defense of title to land 320,000. Debt recoverable 200,000. Others allowable 350,000. Total 1,270,000. Note 3. The foreign exchange loss provision arose as a result of fluctuation in cash balance through conversion from Ghanaian cedis to Nigerian naira by a commercial bank in Ghana. Note 4. Capital allowances for the year as agreed with the Federal Inland Revenue Service as follows. Nigeria 1.6 million, Ghana 520,000. The chairman of the company was not happy with the assessment by the officials from the Federal Inland Revenue Service, FIRS, on the Ghanaian's operation. He based his opinion on the fact that the Ghanaian operation is offshore and relevant taxes had been paid in Ghana. The Federal Inland Revenue Service officials disagreed with the Ghanaians and asked the company to file for double taxation relief since Nigeria has a double taxation agreement with Ghana. At an emergency meeting of the company's board held on June 12, 2019, it was decided that a professional accounting firm should be engaged to resolve this contentious issue. You have been appointed as the tax consultant to the company required. A. Provide a professional advice on the status and tax implications of the company's operation in Ghana. B. Draft a report showing the tax liability of the company for the relevant assessment year, bearing in mind the reliefs available to the company under the Companies Income Tax Act, CAP C21, Law of Federation of Nigeria 2004, as amended. This question is obtained from ICAN November 2019, question number 2, Advanced Taxation. Now, let's have the solution to the question. I will ignore the theoretical part of the questions since they have been explained with the concept I've explained earlier. I will only focus on the practical aspect. Now, let's have the solution. Lab J, Nigeria Limited. Computation of tax liability. For what is the year of assessment? So we have, you were told the result of the business operations in Nigeria and Ghana for the year ended December 31st, 2018. This is the year end of the entity. 2018 will be assessed in 2019. So we have for 2019 year of assessment. So we have total. We have Ghana. And we equally have Nigeria. So, Nigeria, Ghana, and total. Now, you start with the net profit as per account. Net profit, Nigeria 6,725,000. Ghana 5.5 million. Total 12,225,000. So we start with the net profit as per account. Net profit as per account. Nigeria we have 6,725,000. Ghana we have 5.5 million. Total we have 12,225,000. Then we now add non-allowable expenses reported in account. Those ones reported in accounts. Back to the question. If you have watched my earlier presentation on company income tax or the computation of adjusted profit, I've told you that those expenses that are wholly, reasonably, exclusively, and necessarily incurred for the purpose of generating revenue, I've told you they are all alive. So any expenses that are reasonably incurred for the purpose of generating revenue are liable for tax purpose. Now, let's back to the question. Salaries is reasonably incurred, it's allowable. Bad debts is allowable. Entertainment is allowable, they are reasonable. Legal expenses is allowable. Traveling expenses is allowable. Repairs and renewals, those that are reasonably incurred, they are allowable. Bank charges is allowable. All these fees is allowable. Then we have depreciation on assets. We said depreciation is not allowable for tax purpose, but capital allowance is granted in lieu of financial accounting depreciation. So Nigeria we have 1,820,000, Ghana 720,000, total 2,540,000. So depreciation of assets. Nigeria, we have 1,820,000. For Ghana, we have 720,000. And total, we have 2,540,000. 540,000. So back to the question. We have foreign exchange loss provision. Nigeria is named, Ghana and total 1,410,000 each. Foreign exchange loss provision. Nigeria name and the Ghana 1,410,000 and total 1,410,000. Back to the question. We have miscellaneous expenses 900,000 is reasonable. Foreign taxes paid. Nigeria name, Ghana and total 1,030,000. Foreign taxes paid. Nigeria name, Ghana 1,830,000. Ghana 1,830,000. Now we have additional information. For the Nigerian operation, bad debts include 900,000 general provision. Remember we've said earlier that provision for bad debts is not allowable. If you have watched my presentation on company income tax adjusted profit. So general provision is not allowable, while specific provision is allowable. So since 900,000 relates to Nigeria operation and it's not allowable, we are going to add it back. So we have general provision for bad debts, 900,000, which relates to the Nigerian operation. Ghana name total, we have 900,000. Note 2, legal expenses consist of tax dispute. Tax dispute is not allowable, 400,000 naira. So legal expenses, because of tax disputes. So tax disputes. And the legal expenses was incurred by Nigerian company of 1,270,000. So that means the cost of tax disputes we are going to disallow will be adjusted in Nigeria profit. That amounted to 400,000. 400,000 and total. Back to the question. We have defense of title to land. This is a capital expenditure. We say all capital expenditure are not allowable for tax purpose. So we have cost of defense. Defense of title to land. And that amounted to 320,000. 320,000. 320,000. Back to the question. We have debt recoverable. This is reasonably incurred. It is normal for the business to engage the service of a legal luminary to collect their debts. So it is reasonable. So it's allowable. Others, I were told these others are all allowable. Now, note 3. The foreign exchange loss provision arose as a result of fluctuation in cash balance through conversion from Ghanaian cedis to Nigerian naira. by a commercial bank in Ghana. So we have disallowed this foreign exchange loss. We've adjusted that. So we don't need that. Then note 4, capital allowances for the year as agreed with the Federal Inland Revenue Service as follows. So we are going to deduct the capital allowance after we've arrived at our assessable profit or adjusted profit to get the total profit. Now, we have the chairman of the company was not happy with the assessment by the officials from the Federal Inland Revenue Service, FIRS, on the Ghanaian's operation. He based his opinion on the fact that the Ghanaian operation is offshore and relevant taxes had been paid in Ghana. The Federal Land Revenue Service officials disagreed with the Ghanaian and asked the company to file for double taxation relief since Nigeria has a double taxation agreement with Ghana. At an emergency meeting of the company's board held on June 12, 2019, it was decided that a professional accounting firm should be engaged to resolve this contentious issue. You have been appointed as the tax consultant to the company required. So, those are the information we need. Now, let's compute the adjusted profit. So, adjusted profit. We don't have any income that is not taxable. For Nigerian operation, we have 6,725,000 plus 1,820,000 plus 900,000 plus 400,000 plus 320,000. So we have 10,165,000. Then for Ghana, we have 5.5 million plus 720,000 plus 1,410,000 plus 1,830,000. So we have 9,460,000. Then for total column, we have 12,225,000 plus 2,540,000 plus 1,410,000 plus 1,830,000 plus 900,000 plus 400,000 plus 320,000. And that is totaled 90,625,000. After this, you are going to claim the capital allowance as a relief. From note 4, you were told capital allowances for the year as agreed with the Federal Land Revenue Service as follows. Nigeria 1.6 million, Ghana 520,000. So we have capital allowance. Capital allowance for Nigeria company, we have 1.6 million. You are going to deduct it. For Ghana, we have 520,000. If you add this, you have 2.2 million, 120,000. If you now deduct your capital allowance, you arrive at the total profit. Total profit. So for Nigeria, for the total column, 19,625,000 minus 2,120,000. 2,120,000. So you have 17,505,000. Then for Ghana, we have 9,460,000 minus 520,000. So we have 8,940,000. For Nigeria, 10,165,000 minus 1.6 million. So we have 8,565,000. Now let's compute the Commonwealth rate. Remember, I've told you to compute the Commonwealth rate of tax, you have tax paid or payable in the foreign country. How much is the tax suffered in Ghana? Then you have foreign taxes paid, 1,830,000. The tax paid in Ghana is 1,830,000 over total profit in Ghana. And how much is the total profit in Ghana? We got 8,940,000. 8,940,000 times 100 over 1. This will give you the tax rate in Ghana. So 1,830,000 divided by 8,940,000 times 100. So we have 20.47%. 20.47%. Remember, the name of the company is Olab J Nigeria Limited. This name alone shows that this company is incorporated in Nigeria. It's a Nigeria company. And I've told you, for a Nigeria company, you are going to compare the Commonwealth rate with half of Nigeria rate of tax. And Nigeria rate of tax is 30%. So half of 30% is 15%. We see this is lower than this. So we compare the Commonwealth rate. Commonwealth rate is is greater than half Nigeria rate. So half Nigeria rate is 15%. This is greater than this. That means the relief will be half of Nigeria rate of tax, since the company is a Nigeria company. Therefore, the relief is 15%. So, how much is the tax payable in Nigeria? Total tax payable in Nigeria, that will be, Nigeria tax rate is 30%. 30% of the total profit, 17,505,000. What is 30% of that? Of 17,505,000. That gives us 5,251,500. 251,500. So double taxation relief. Double taxation relief. What will be the relief you can claim on this tax? I will say the relief rate is 15%. Since 15% is lower, we say 15% will be used as our relief rate times the total income in Ghana, which is 8,940,000. 8,940,000. What is 15% of 8,940,000? So we have 1,341,000. Then if you subtract it from the tax, we have 5,251,000 500. So we have 3,910,500. This is the net tax payable. So we have tertiary education tax. Tertiary education tax. I want you to know that there is no retrospective application of Finance Act. The year of assessment is 2019. As at 2019, the tertiary education tax rate was 2%. As at 2022, it was 2.5%. As at 2023, it has been reviewed to 3%. Since this year of assessment is 2019, and the rate as of then was 2%, 2% will be used as tertiary education tax. But if the year of assessment is 2023, we will have used 3% as our tertiary education tax. So 2% will be used for 2019. So we have 2% of assessable profit. Remember, our adjusted profit is the same as the assessable profit, and that is 19,625,000. 2% of 19,625,000. So that gives us 392,500. 392,500. There is no retrospective application of Finance Act principle. You cannot use 3% since the year of assessment is 2019. Now let's add this. So this plus this plus 3,910,500. So we have 4,303,000. This is the total tax payable. Total tax payable, 4,303,000. This marks the end of the solution to this question. Please drop the love emoji. Also share the video with others. Please do that in my favor. Thanks for watching ZICA.